Welcome to another interesting business studies class. My name is Emmanuel Wido. In today's class, we are looking at the theme Bookkeeping and Business Success and the topic Bookkeeping Ethics. By the end of the lesson, you should be able to explain transparency, accountability, and probity. Secondly, state the need for transparency, accountability, and probity in public domain. Thirdly, list attributes of transparency, accountability, and probity. Fourthly, you should be able to describe challenges created by the lack of TAP. TAP here means transparency, accountability, and probity. The fifth objective of this lesson is to examine solutions of TAP. And lastly, for this class, you should be able to explain due process and its operation. Many times, business owners establish businesses, but they fail to keep records of their business establishment. This is common with the sole proprietorship form of business. However, when keeping records of a business, it is important that you have three basic components in check. This is aimed at ensuring that you're not only keeping these records, but these records could mean well when you want to use them for getting loans or grants. In this class, we will be considering these components and see how they help in bookkeeping ethics. Let's go on by knowing the definition of some terms. In order to know and understand this class very well, I will be explaining just two terms. The first of them is bookkeeping, and then we'll be looking at ethics. So what's bookkeeping? Bookkeeping refers to the daily recording of a business firm's financial activities. So when a business firm has a book where such business entity records what comes in to the business and what goes out financially or as an article. This place we are looking at articles as goods. Then such a business is venturing into bookkeeping. The business has a record for activities that goes on in the business. Now, ethics, on the other hand, refers to moral standards or principles that govern an individual's behavior in a business premise. Therefore, bookkeeping ethics thus refers to the act of being truthful, careful, and diligent while keeping these records of daily financial activities of a business. An individual who is responsible for keeping these daily records is referred to as a bookkeeper, and such a person must be trusted and respected. Earlier I said that there are certain components that one should have or keep in check when engaging in bookkeeping. So what are these components of bookkeeping ethics? There are basically three of them. We have transparency, accountability, and probity. So what is transparency? Transparency refers to lack of hidden agendas and conditions accompanied by the availability of full information required for operation. Here, you're not hiding information from your customers or the record. Somebody came in and bought a goods of 150,000 naira. Rather than write 150,000 naira, you notice that the person probably paid more. You now decide to write the cost price of the product and then keep the other amount. Now, you're not being transparent to the firm and to the customer. You're hiding financial transactions, the ones you sold when the business owner was not around and they can't account for the goods. That means you're not being transparent. The records on ground do not tally with what is left in the shop. That's what transparency talks about. When you're transparent, you will be truthful. You'll have clarity. You'll be open. You'll have accuracy. You'll be an honest person, and people will be able to believe you. So what then, as we go further, is accountability? Accountability refers to the act of being answerable to someone. When you are accountable to something, it means you are answerable to that thing. It means that at a certain point in time, you will be called to give an account of a task you were asked to accomplish. So here, in bookkeeping, accountability refers to the act of being answerable to someone. It could be the accountant. Okay, we have made sales today. How much did we realize? This does not tally. Why? Okay, Mr. Uchenna bought it on credit. That is why I did not capture it. So you're telling the accountant why the figures does not replicate what actually transpired in the shop that fateful day. So that's accountability. And when you're accountable, you have responsibilities. You are committed to your job. You are a pride owner. You have core values that can be emulated. People can easily trust you with their funds and go to sleep, knowing fully well that when they ask of such funds, you will be able to give them back. On the components of bookkeeping ethics, the last of them is probity. What does probity mean? It means the act of abiding strictly to morals of business. Here we are looking at probity as being morally qualified as a business owner. In this case, you have morals that can be emulated. You do not cheat, you don't tell lies, you do not quote wrong prices. For instance, you walk into a shop and there you have it, the price tag, 150 naira. But the shop owner is telling you that no, it is 250 naira. But it's there. The person is trying to cheat you. As such, the person does not have moral standard or values in business. Going further, let's look at the importance of transparency, accountability, and probity in business. How does TAP help businesses? For this class, we are looking at 4 of them. The first of them is that transparency increases the level of trust between customers and business owners. When you don't cheat your customers, when you quote the right prices to them, they can at any point in time call you over phone. Please, can you keep this product for me? And they are sure you will send them the original of such a product. Secondly, in business, transparency builds a good relationship between business entities. When you have been in business over a period of time and you find out that your partners are not in any way cheating you or shortchanging you, you have this business relationship, a strong bond with your partners. That's what transparency, accountability, and probity can do in business. Thirdly, accountability as a component enhances moral standards of managers and workers. Uchenna, buy me a loaf of bread. Uchenna comes back with the loaf of bread and the manager's balance. That's accountability. You have brought his balance. From the balance, he can tell how much the bread actually cost. The last importance is that transparency, accountability, and probity help to improve the performance of business. When you're transparent, when you're accountable, when you're open, you don't cheat your customers, then you are improving your business, because a lot of people will want to buy from you, knowing fully well that they are not going to be cheated when they buy goods from you. As we proceed, let's look at the attributes of TAP in business. I told you earlier on that TAP stands for transparency, accountability, and probity. So when you hear me use the word TAP, know I am talking about transparency, accountability, and probity. What then are the attributes of TAP in business? Number one is that it must ensure that the right information about a business is given to existing and new clients. TAP ensures that the right prices, the right good specifications are made known to the customers and to the new customers and existing customers in business. So when you change your product, you have to tell your consumers that something has been altered in this product, so that they have an awareness of what they are buying. The second attribute of TAP in business is that it encourages good relationship in business. You're able to achieve good relationship in business when you are accountable, when you are transparent, and when you do not cheat people. The third attribute here is that producers and consumers should be able to trust one another during and after each business transaction. When there is TAP in play, business partners have a high level of trust for one another. And lastly, terms must be made clear and understood to avoid disagreements which may result to an unhealthy business transaction. Oh, you did not tell me about this condition. It can't happen. These are disagreements. But if they were stated before the deal actually took place, such will not arise. So when you have TAP in place, such disagreements in business will not occur. Going further, what are the challenges? Challenges of TAP in business. The first of them is greed. Some business owners are greedy. You just want to make excess profit. So you go ahead to quote wrong prices, sell fake products just because you want to make profit. Secondly, we have lack of or inadequate monitoring. The government does not go around looking at the prices most of these shop owners quote to their customers. It's only when you complain that maybe the complaint is taken up. So you find business owners quoting wrong prices to customers, cheating customers, and that's because there is no monitoring. And lastly, for this class, lack of knowledge from the customers. You don't know how much the goods are worth. You don't know the price of the product. So you go and they sell you a television set of 25,000 naira for 150,000 naira. And that's because you don't know the price, but you have the money. So the shop owner was able to cheat you of a lot of money. What are the solutions to these challenges? The first solution here is training of business owners on key details of goods and services they deal on. Training of business owners is important so that they know and have an idea of the goods they sell. Secondly, contentment and lack of greed by business owner is key. So business owners should be contented and not have some element of greed in them. With that, they will be able to improve their businesses. And lastly, for this class, being diligent in bookkeeping activities of the business by recording every business transaction, no matter how small it may be. So no matter how little the transaction was, you should have it captured somewhere so that you can be accountable for it someday. Due process is a guide that ensures that legal and business matters be resolved according to established rules and principles, and that individuals be treated fairly. In this case, a firm has policies, principles that guide staff working in such a business establishment. These principles are aimed at ensuring that we do not have staff engaging in jobs that are not related to their job specifics or functions. For example, if a firm rule states that all cash transactions after proper recording must be deposited in the bank by the accountant of the firm, the process of cash deposition for this firm goes thus. The salesperson collects the cash, sends it to the bookkeeper, who records what has been gotten, and then forwards the same amount to the accountant. And then the accountant heads to the bank to deposit the money. Since this is the pathway for depositing cash for this firm, it will be an error for the salesperson to go to the bank because that's not the process. So if the salesperson heads to the bank and let's assume something happens, the salesperson can be held accountable. He could even lose his or her job because that's not his or her function. So due process is ensuring that I am the accountant, you are the salesperson. Allow me do my job, you do yours, so that we don't have conflict in a working environment. Having said all this, let's take a quick summary of what we have learned in our class today. In today's class, I told you that bookkeeping refers to the daily recording of a business firm's financial activities, which may involve buying and selling. I also told you that ethics refers to moral standards or principles that govern an individual's behavior and activities while doing business and in everyday life. Next, we learned that bookkeeping ethics refers to the act of being truthful, careful, and diligent while keeping records of daily financial activities of a business. Furthermore, we learned that a person who keeps daily records of financial activities of a business is referred to as a bookkeeper. We also learned that the basic components of bookkeeping ethics are transparency, accountability, and probity. Next, we learned that transparency refers to the lack of hidden agendas and conditions during a business transaction. Furthermore, we're able to understand that accountability is the ability to clarify, explain, and justify actions taken by an individual. And lastly, we learned that probity refers to the act of abiding strictly to the morals of business by being honest, especially in financial related activities. At this point, I would like to test to know how much you have gathered into this class. Let's take a few test questions. Question number 1. Dash refers to the act of being truthful, careful, and diligent while keeping records of daily financial activities of a business. A. Bookkeeping ethics. B. Account keeping ethics. Or C. Sales keeping ethics. The correct answer to this question is option A. Bookkeeping ethics. Question number 2. One of these is a component of bookkeeping ethics. A. Transparency. B. Profitability. Or C. Greed. Option A, transparency, is one of the components of bookkeeping ethics. This is where I end the class today. I hope you can define bookkeeping ethics and state the 3 components of bookkeeping ethics. Until I see you again in another interesting business studies class. Bye-bye.